James Glassman joins us, Managing Director with the JP Morgan Chase. James, morning. Thank you for joining us. What do you make of the U.S. economic data, and are you pleasantly surprised with the resilience the U.S. economy is reporting?
Yeah, I mean, the news is pretty good, and I think it shouldn't be that surprising. Monetary stimulus is very aggressive, and a lot of the problems for the U.S. last year were more related to what happened in Japan and the oil developments, and at the same time, the U.S. has the fiscal stimulus has been pulling back. Last year was quite significant. This year is less so. So, you know, to me, the news is pretty good, and I think it's encouraging new optimism about the recovery prospects. I think when the immediate danger in Europe passes, the global market in general, the global tone will probably improve some. Right now, the market seems to be hung up a little bit by the ongoing developments in Greece and the European region. But I think you know it's helping that the U.S. news is turning more positive, and it's bringing back risk appetites. As you said, it's still pretty cautious, but I think it won't be long. I mean, yes, stock market is not far from its peak, but the truth is that corporate profit margins are at all-time record highs. And so earnings have been far ahead of the market valuation. And I think that what that tells you is when the dangers appear to be passing, it's going to be very easy for investors to take more risk and to start thinking about growth possibilities and what does that mean for the equity market.
James, hi, morning. What about Greece? Because talks over there have now further been delayed. Do you think if indeed this becomes a long-drawn process, it's not going to do anything but make the markets, that is equities, a little more jittery?
Yeah, you know, the fundamental problem is probably a long, drawn-out process because no matter what they agree to, private versus public sharing of the write-downs they want to do right now, this really just provides a short-term relief. The real problem is even if you could wipe out all debt for Greece, the real problem is the economy is very imbalanced. It has a chronic deficit that would have to be financed again. And so it really is going to take some fundamental reform that is very difficult socially, and there's going to be a lot of resistance to it. So the Greeks have to decide whether this is the path they want to be on, and they have to decide, is it better to be in the Euro family or be outside? I think the implicit message of everybody in all this effort is that it's better to stay together because if Greece is allowed to pull out, it creates contagion problems for the other regions. So I think short term they have the ability to calm things down for a while, but really the real work is going to require fundamental growth and reform, and that's going to take some time. But I think once we get past this first hurdle, get past this Greek situation, for the market, I suspect that this issue will die down.
James, there are 40 key elections which are due in 2012. Do you expect central banks to print more money? Because historically, when big elections are due, central banks, they always pump prime the economy with excess money.
Yeah, you know, that is a perception people have, but the truth is all the central banks, because these economies are struggling so much, all central banks are really effectively very stimulative. And yet, you know, so it's hard to argue, it's hard to believe they could be more stimulative than they are. But I think because the recession was so severe and it's taking so long to get out of it, I doubt that you're going to see the kind of response to the economy to these actions like you normally would get. So, in general, I tend to think central banks around the world, yes, you can't ever dismiss political pressure, but I think the real driver for what these central banks are doing right now is the economies are struggling and inflation is not really an issue in many areas. Some areas that's not true, but so yeah, I think that's you know, on paper it may look many years down the road it may look like this is what's going on, but the truth is the central bank in Europe and the U.S., most of these countries, they are moving very aggressively, but it's not so much because of the election. It's more because the economies are struggling and unemployment is quite high, particularly in the U.S.